I wanted to take a few minutes today to talk about how the mortgage climate has changed in Vancouver. More specifically, I wanted to talk about how the mortgage environment has changed in relation to high-value loans. So let's get right down to it. The first thing I want to talk about is how banks are treating foreign buyers. I recently sold a $3.5 million property, and I experienced firsthand how difficult it is for a foreign buyer to get approved for a loan right now. In the past, a bank would have looked at a high-value loan pretty similarly to how do they look at other loans. As long as the buyer was putting down a healthy amount of equity, in this specific instance where the buyer was purchasing this $3.5 million home, they were putting down 50% equity. So this buyer had a healthy equity requirement. They wouldn't have looked much further than that. They would have made sure, obviously, that the buyer had the ability to pay the loan. But they wouldn't have really cared where the money was coming from, where the equity was coming from. But now things have changed. Banks are really scrutinizing where the equity is coming from. They want to make sure it's coming from a legitimate source. So they're looking very closely at equity. They are also looking very, very closely at whether the buyer will be able to make the payments. So regardless of the amount of money put down, they're really looking at, number one, where the equity is coming from, and number two, whether the buyer can make the payments. And in this case, it took over 2 weeks for this buyer to get approved, even though he was putting down 50%. So sellers are going to have to become more patient when waiting for subject to financing clauses to be removed. The second thing that has changed is how banks are treating purchases over $1 million. So any buyer now that goes to buy a home valued at $1 million or more is required to put down 20% equity. That's right, they're required to put down at least $200,000 if they're looking to buy a home over $1 million. So in the past, again, banks wouldn't have looked too closely at the equity. As long as the buyer could show that he could make the payments, if he was putting 5-10% down and he was a doctor or a dentist and he could show that he could make the payments, no problem. Today, banks are really, really looking closely at the equity requirement. They want to make sure that they have at least 20% down for any purchase over $1 million. So the last thing I want to ask, is it good? Is this a healthy thing that the banks are really tightening up their lending requirements? And I think it is. I think this is very positive. We don't want another 2008 to happen in Canada. The last thing we want is people defaulting on their loans. Right now we have a very healthy lending environment in Canada, and we want it to stay that way. So that's my take on the lending environment right now in Vancouver and in Canada in general. If you'd like to if you're thinking about buying or selling a home in Vancouver and you'd like a really hard-working realtor, feel free to give me a call anytime. You can reach me at 604-808-9796. My name is David Seton with Answers in Real Estate and Oakwyn Realty. And as always, thank you so much for listening today.